So good evening, everyone, and welcome to our class today. My name is Michael Oshomi, and with me I have Favor. I have Mrs. Favor with me, which I think I've introduced her to you guys before as the co-lecturer for tax skills level for tax skills level of our class. So she will be the one taking us this evening on our task class. So I hope you guys are happy. So let us welcome her. Let me show you see some emoji sign from you guys. Let's welcome her. Yes, thank you. Let's welcome her. So she is going to start the class straight away. And please, I need you guys, please, maximum silence. Whenever she wants to ask you a question, she will call you to ask your question. Please, off your video. Anybody that I'm seeing your video or you are making noise, please, the admin person is going to be removed that person straight away. Please, let's comply and make everything easy. Thank you. And also you can write down your questions at the end. You can ask your questions from her. So Madam Favor Oyibayado, ACA, please, you can start your class, ma'am. Thank you.
Yeah, good evening, everyone. Good evening, sir. Please confirm you can hear me.
Yes, clearly. I can hear you clearly, ma'am. Thank you.
Okay. So first of all, I want to say thank you for this opportunity. My name is Favor Oyibayado, ACA. I will be the co-lecturer for this this diet on taxation. That's tax for skills level. So without wasting much of our time, would like us to begin with the class because time is precious and we have limited time for this class. So for today's class, we'll be looking at taxation of employment income. When we say taxation of employment income, those income we receive from our employment places, the different places we work. How are those income being taxed? How are they subject to tax? And what are even the different types of income that we get from our employment places? That's what we'll be looking at this evening. And under this taxation of employment income, we'll be looking at employment income at its name is. We'll be looking at contract of service and also contract for service. There are two different things. One is contract of service. The other one is contract for service. We'll equally be looking at types of employment. We're looking at types of employment. We'll look at the distinction between employment, vocation, and profession. So all of these, the reason why we have to look at all of these separately is because each and every one of them has their different way that they are subject to tax according to the tax laws. So that's why we need to look at them one after the other and also look at what the tax law have said about them. How do we subject each of them to tax? We'll also look at the itinerant worker. We'll look at employment income. We'll look at exemption of minimum wage earners from the payment of personal income tax. Those people that earn within the minimum wage or even below the minimum wage. We know they are being exempted from income tax. So we'll look at what the tax law says about them also. We'll also look at the condition for taxation of income from employment. The conditions for taxation for income from employment. We'll also look at the determination of importance of residence. So, our personal income tax is being remitted to the state internal revenue according to the Nigerian law. Personal income tax of employee is remitted to the state internal revenue in the state where the employee reside. So that is why we need to determine what the we need to know what the residence is, or somebody can be working in Lagos State, for example, and the person resides in Ogun. So it is important to decide or to know where the person resides, because that will determine where the tax will be remitted to. So that's one of the importance for this residence. We'll look at the meaning of income, the different type of income, and also we'll look at how we can resolve dispute over residence rule application. From time to time, a lot of disputes has come up again because of where people work, difference between where people work and where they reside. They tend to be conflict on which of the state internal revenue should the tax be remitted to. So we're equally going to look at how to resolve all of these disputes according to the tax laws, according to what the tax law says about them. So without wasting any further time, we'll just continue. I would like to confirm again if we are still on the same page. Please confirm you are hearing me. You still hear me, so I'm not talking to myself. Okay, that's fine. That's fine. All right. Thank you. Thank you. So let's just move on with the speed of grace. So for the employment income, according to the Personal Income Tax Act, CAP P8 LFN 2004, as amended, defines the employment to include any appointment or office, whether public or otherwise, for which remuneration is payable. An employee and an employer shall be constructed accordingly. So when there is an agreement and at the end of the day there is a remuneration, whether it's a public place or is even a private sector like where most of us work, then there is an employment income. And also there is an employee and there is an employer. Then there is an employment income. An employment income has emerged. That's just the simple definition of employment income. So you look at these keywords that are there. Remuneration, there is remuneration payable, there is an employee, and there is an employer. So then there is an employment income. It's simple as straight. All of these kind of things are things that will form your 2-mark question or even 1.5 mark question. So we have to take note of them. Contract of employment. Remember I mentioned contract of employment and contract for employment. So what is contract of employment? According to the Labor Act of 1994, it defines the contract of employment as any agreement, whether written or verbal, expressed or implied, whereby one person agrees to serve the employer as a worker. An individual under contract of employment is commonly referred to as an employee. So when somebody agrees to serve another person, when an individual agrees to serve the other person, let's say Mr. A now agrees to serve Mr. B as an employee, then there is a contract of employment. That is to say, for those of us that work in different places, what we are into is a contract of employment. You apply for a job, you did an interview, you passed the interview, you are given an employment letter, then you start to work, you have your employer, you being the employee. What you are doing is a contract of employment. Then contract for employment, or on the other hand, is an agreement whereby a person is engaged as an independent contractor. Such as a self-employed person or a vendor engaged for a fee to carry out an assignment or a project for the company. So this one now is not like you don't need to be working under the person. You don't have there is the agreement that is binding on you is not the one that you are an employee under the person. Now let's say, for example, a company employs the services of an auditor to come and look at the books of accounts. The auditor is not an employee under the company. So in that kind of situation, what is happening there, or what has happened there, is contract for employment. You engage the contractor, you engage the vendor to come and render a service to you. At the end of the day, you pay the person. Most times they are very, very short. You pay the person and that is the end. In a contract for employment, there is no employer and employee relationship. In the contract, and the self-employed person is not covered by Labor Act. An individual under contract for employment is referred to as independent contractor or self-employed person. So there is no labor law that covers that. Is that of employee that is under the labor law. That of the contractor or a vendor is not under the labor law. So for contract for employment, the labor law is not guiding, is not covering them. So that's the basic definition or differentiation between the contract of employment and contract for employment. I hope this is clear. Thank you, thank you, thank you, thank you. So let's continue. So let's quickly look at the basic difference between the contract of employment and contract for employment. Some of them has been spelled out in the definition, but let's just look at them again. An individual under a contract of employment earns remuneration, what we normally call salary, while an individual under a contract for employment earns profit. For example, if you engage in service of let's say an artisan, for example, there is an artisan, for example, there is a contract, come and do something for you. At the end of the day, the person will incur costs to run that, to do that stuff for you. When the person deducts his or her cost at the end of the day, what the person earns is called profit. It's not salary. You're not paying the person salary. The person earns profit for doing that, rendering that service for you. Unlike that of the employee, what you pay the employee, which is basically monthly payment at the end of the month, is called salary. So this is one key difference between the contract of employment and the contract for employment. Another significant difference is that the self-employed person is required to register for value-added tax, while an employee is not required to do so. So the person, whoever that has a business that is coming contractor, he or she is required to register under the value added tax so that he can remit the tax, especially when the person is selling a vatable goods. But for somebody that is working and collecting salary, that person doesn't have any business with VAT for that salary, except you have another business you are doing. But for the purpose of that salary that you are earning at the end of the month, it is not vatable. So for that reason, you are not expected to pay VAT. An employee has the right not to be unlawfully dismissed and to receive redundancy payment and other employment rights, while the self-employed person does not have such rights. So some of us that are working, we have a contract that is binding that, okay, if you are the one that wants to resign, you have to give the company a 1 month notice or something, or you pay in lieu. And if the company, on the other hand, is the one dismissing you, or the one that is telling you that they want to terminate the contract, they too have what they need to do for them to terminate your contract. So they can't just do that unlawfully, because there is something that you have agreed on and you have signed. And even if they want to, they say your services is no longer needed, or the services of the person is no longer needed, they resort to call redundancy fee. They will pay you off for that. But that of the self-employed people, or the contract for employment, most time is maybe a 3 month contract, and at the end of the day, everybody will go their different way when both parties have fulfilled their obligations. So these are the distinct difference between the contract for employment and the contract of employment and the contract for employment. Most of the difference are already called out in the definition, but you can still see them, you can still bring them depending on the nature, the way the question comes out in your exam. So another thing we'll be looking at is the types of employment. Types of employment. The paragraph 1 of the first schedule of personal income tax at 2004 as amended specified 2 types of employment as follows: Nigeria employment and foreign employment. Under the Nigeria employment, this means an employee not being in a foreign employment, the duties of which are wholly or partly performed in Nigeria. An individual who holds a Nigerian employment on the first day of January in a year of assessment, or who first become liable to tax in Nigeria for the year by reason of his entry that employment that year, shall be deemed to be resident for that year in the territory in which he has place or principal place of residence. So let's first of all look at the Nigerian employment. What is Nigerian employment? When we say somebody in Nigeria is under a Nigerian employment, what does that even mean? So that means that you are not, what you are doing, your duty are solely, wholly or partly performed in Nigeria. You are not a foreigner. The person is not a foreigner that came to Nigeria, maybe an expatriate that came to Nigeria to work. So the person is employed and the person perform his or her duty in Nigeria. And how do we tax this kind of people? Or how do we determine their tax? So that's where an individual who holds a Nigerian employment on the first day of January in a year of assessment, or who first become liable to income tax in Nigeria for that year by reason of his entering that employment during that year, shall be deemed to be resident for that year in the territory in which he has a place or principal place of residence. So if you want to tax that person now, that's where the person is on the first day of the assessment year, which is usually 1st of January. Most personal income tax are usually charged. They are taxed on a actual base. So where the person is on the first day of the year, in which he has a place or a principal place of residence, that's where the person will be taxed. As the case may be, or the day on which he enters upon the full duty of that employment in Nigeria, provided if the individual is on leave from a Nigerian employment on the first day of January in the year of assessment, he shall be deemed to be resident for that year by reference to his place or principal place of assignment immediately before his leave began. So if on the first day of the year, the person is on leave, so we cannot determine where the person is on that first day because the person is not working on that first day. Then we will now have to trace it back to where was the person the day before the leave started. So that is where that's where will be the jurisdiction of where the tax will be remitted to, or where the tax will be paid based on the place or principal place of residence. So as we continue, we'll still look at the meaning of place of residence and principal place of residence. So let's quickly look at foreign employment. Foreign employment means an employment, the duties of which are only performed outside Nigeria, save during any temporary visit of the employee to Nigeria. So duties that people that work outside Nigeria, they perform their duties outside Nigeria, they are referred to as people that have foreign employment. And how do we tax these people? An individual who holds a foreign employment on the first day of January in a year of assessment, or who first become liable to tax in Nigeria for the first year by reason of his entering that employment during the year, shall be deemed to be residents of that year in the territory in which the principal office of his employer is situated on that day, or on the day his foreign employment commences, as the case may be. So whichever the case is. So look at the difference now is that the one for the Nigerian employment is using the person's place of residence or the person's principal place of residence. Why that of the foreign employment is using the principal office of the employer, which where the principal office of the employer is situated, that is where will determine the jurisdiction of the tax. So let's quickly continue with looking at the difference between employment, vocation, and profession. Employment, vocation, and profession. But before we continue, I would like to confirm if we are still together. Can you still hear me?
Yes, so can I hear
Okay.
you?
Okay, thank you, thank you. I can see your reactions. So what is employment, what is vocation, and what is profession? Are they the same thing? Do they have difference? So let's quickly look at them now. Employment is an agreement between an employer and an employee that the employee will provide certain service on the job, and the employer is designated in the employer's designated workplace to facilitate the accomplishment of the employer's organization's goal, mission, in return for compensation. And in return for compensation, the agreement can be verbal, it can be implied, or an official employment contract. So what is this saying? There is an agreement between an employer and an employee. So Mr. A and Mr. B are agreeing that, okay, Mr. A is telling Mr. B that you will do this for me, you do XYZ for me. Mr. B agreed that, okay, I will do XYZ for you. Mr. A and Mr. B agree that, Mr. B, you'll be coming to this place, come and do this XYZ for me. Though there are cases where we don't need to go to offices again to carry out tax, to do work. We can now work from the comfort of our home. But let's say Mr. B has to come to that a particular place to carry out this assignment. So there is an agreement between Mr. A and Mr. B that Mr. B will come to let's say, for example, Ikeja, to come and do this thing, do this and do that. And whatever Mr. B is coming to do will help Mr. A to achieve his organization's goal, mission. And at the end of the day, when Mr. B has fully fulfilled this obligation, Mr. A will pay a compensation. Then this is called an employment. So this can be on a verbal note, it can be implied, or it can be a written contract. In employment, the employer determines where, when, how, why, and what of the work that is performed by the employee. The employer will tell you what you want to do, how you want to do it, when you should do it, and how and what exactly you need to do. So you, the employee, you're expected to read and understand all of this before you even sign your contract in the first place. So that's the employment. Then vocation. Vocation is a specified occupation or profession or trade to which a person is specifically drawn, or for which he or she is situated, trained, or qualified. Vocation can either be an activity that serves as an individual regular source of livelihood, or an activity engaged in especially as a means of passing time. So it could be something you are just doing for the meantime. It could be something that you are doing for, that's your means of livelihood. But it's something that you are drawn for, you are trained for, and you are qualified for. For example, people that are in fashion, that are into fashion, that's the vocation. They are trained for it and they are qualified to do it. They did not really go for any formal education to do it, but they learned it, they got trained for it, and they qualified, and they are making a livelihood from it, they're making a living from it. Then that is a vocation. Another, the next one is a profession. A profession is an occupation that requires specialized education, emphasis on specialized education, knowledge, training, and ethics. Although professionals make their living in what they do, this paid work is often more than just a job or occupation alone. Whether the occupation is law, medicine, plumbing, writing, interior design, or baseball, those who are in it are expected to meet and maintain certain standards. Example, chartered accountant. Whether you are a chartered accountant just to make money, there are some things you need to abide with. If not, I can withdraw your certificate. You can't just misbehave. For the fact that you are a chartered accountant, there are some things you need to drop, while there are some you need to pick up to move on. And not just ICANN alone. Other professional bodies, they have their do's and their don'ts. They have their rules and their regulations. That's where ethics come in. You have to abide by the rules and regulations. it must not be known, or it must not be heard that a chartered accountant did something that is unlawful, and it will be reported. If that happens, there is a penalty for it, depending on the gravity of what you did or what you have done. There is a penalty for it. So you see that a profession is highly, will I say highly regulated now? Yes, it is regulated. There are certain standards. A professional, there are certain standards that you need to maintain per time. There are certain standards that you need to maintain. So because you are a professional, you see that you are not distinguished from that normal person that is just doing something. Your own is regulated. You have something that is guiding you. You don't just place things anywhere. There are things, there are certain things you need to consider before you can do some certain things. So that's the difference between, sometimes we use them interchangeably, but they have their distinction, they have their differences. So that's the difference between employment, vocation, and a profession. So let's quickly look at the differences called out among the three of them. Employment is an agreement between an employee and an employer, in which the employee is required to provide certain service on the job in a workplace in return for compensation, e.g. salary or other emoluments. Vocation and profession are specified occupation or trade to which a person is specially drawn or for which he or she is situated, trained, or qualified. So for example, now anybody cannot just go and say, I want to work as a doctor. Yes, anybody cannot just go and say, I want to work as a lawyer. You have to be trained in that area. You have to be like qualified in that area. There are certifications that you need to have for you to be able to work as a lawyer or as a doctor. It's not by I know it. You have to be trained. You have to be certified that this person can do this. Employment income includes any salary, wages, fees, and allowance, including compensation, bonuses, premium, benefits, or other prerequisites. Vocation and profession income, they include gains, profits, and fees. So you see that the compensation in both of them are different. That they are not different. They are not the same types of compensation. So if you are working, you get paid as salary. But when you are maybe rendering a service, like as a professional service, for example, you get profits, you get your fees from it. Another key difference is that employment can be exercised under a contract of service, while vocation and professional can be exercised in a contract for service. So you can see the linking now from where we started from contract of service and contract for service. So you can already place them under, you can already place employment, vocation, and profession under employment for service, a contract for service, and contract of service. Employment can be brought to an end at the prerogative of the employer or the employee. Vocation and profession would usually come to an end at the end of a contract or upon delivery of a service. So when there is a contract for example, you engage the service of an auditor to come and audit your account, the contract will end when the auditors have probably finished auditing the account. They've given you the AFS for that they are working on for that period. That's the audited financial statement. They've presented maybe first, second draft, and both the management and the auditors, they have agreed, they've reached an agreement, and the auditors have concluded. Then the service, they've rendered the service or they deliver the service, then it will come to an end. But for employer and employee, especially from the employee's perspective, employee can get another job today and job resignation letter tomorrow. The highest is to wait for the notice period and the employee will go. There is nothing like you have to finish. I don't think there is anything that you have to finish one particular thing before you will go, depending on the type of contract that you sign anyway. So let's continue. The next we have is the itinerant worker. So, but before we continue, I would like to confirm if we are still on the same page, we are still together. Okay, thank you very much. So who is an itinerant worker? An itinerant worker is an individual, irrespective of status, who works at any time in any state during a year of assessment, other than a member of the armed forces, for wages, salaries, or livelihood by working in more than one state and work for a minimum of 20 days in at least 3 months of every assessment year. So if the person is not what they call army, navy, and air force, they used to move them from place to place. So if you are not an army, you are not a navy, you are not in the military, the armed forces, and your work still require you to move from one place to another within the year, you are not today, you are not in Lagos for the whole year. You have to move from state to state. You have to move from Lagos to Ogun, from Ogun to Delta to Enugu. That's just there are jobs like that actually. So that's just the nature of your job. And you don't spend, you work for a minimum of 20 days in at least 3 months of every year of assessment. Then you are classified under this itinerant worker. So how do we assess their taxes? Because remember we said that when Mr. Michael was taking you on the I think among chapter 1 to chapter 6, when he made mention of this principal place of residence, if I'm not mistaken, where we should remit our taxes based on where we stay or where we reside. But this person now that is not staying in one place, it will be difficult to even determine where to remit that person's tax to. If you are the accountant that is working in the company and you are the one computing the taxes that this person for this particular worker that doesn't stay in one state, it will be a case of today you are remitting to Ogun State, tomorrow you are remitting to Enugu State, next tomorrow you are remitting to Anambra State, because it will be determined by where the person is staying. So that's why the tax law has given us the provision on how to treat taxes that are related to itinerant workers. So in case of itinerant workers, tax may be imposed for any year by any state in which the itinerant worker works for a minimum of 20 days in the last 3 months. So you cannot calculate the number of days that the person has spent in a particular state. If you can get that minimum of 20 days, you can get a minimum of 20 days within 3 months, then that state where the person stays for a minimum of 20 days will be where you remit the tax. So that's the provision of the law. Instead of having to confuse yourself on where will I remit this person's tax, maybe at the end of a particular month.
Please, chapter what is, so I can pass.
So we'll look at cash emoluments. Cash emoluments are the remuneration an employee receives from the employer in cash. They include salaries, fees, allowance, or other gains or profits from employment, including compensation, bonuses, premium. So anything you get from your employment put together, they are called what we call cash emoluments. It can be in form of bonus, it can be in form of benefit, it can be in form of share of profits like most banks do, it can be in form of compensation, it can be in form of salary, but it's coming to you in cash. When I say cash, not like cash, not like cash at hand, though. It can be in your bank, like you receive it in bank, yes. So anything that is coming like that is called cash emolument. But you know that there are other things that an employee benefits that are not coming to the employee's account. For example, okay, let's just continue. So we have what is called benefit in kind. There are some employees that enjoy some other things that are not coming to them in cash. They don't receive it in cash. For example, you have a car, an official car. You have a domestic staff that are working for you and the company is paying. So let's just look at benefit in kind. We'll see them there. Benefit in kind means those expenses incurred by an employer in the provision of benefits to the employee. Such benefits often include furnished living accommodation, gardener/steward, that's your domestic servant, use of official car for private purpose by the employee, installation of air conditioners or generators in the employee's residence. These benefits are regarded as part of the employee's taxable income if this relates to the services rendered by the employee. So the tax law is telling you that if you are enjoying all of these things, you have a staff at home, a domestic staff at home that your company is paying for, is paying their salary. You have a car that you are using for your personal use, not for official trips, but for your personal use. You have a car. You're living in a company's accommodation. Then these things, the tax authority is telling you that the law is saying that it is a taxable income, because ideally, if the company is not giving you this, you are supposed to use the money you're earning, your salary, to pay for all of this. So because you are getting it as free, the tax law says that it is a taxable income. So you have to pay tax on all of these things that you are getting from your employer. They are called benefits in kind. So when you are computing your tax as an individual, you are expected to add them back to your profit, to your income, before you compute your tax. Now we want to look at the exemption and the taxes, the portion of them that you add back to your tax. These benefits are regarded as part of the employee's taxable income if these relate to the services rendered by the employee. Benefits in kind will also include such benefits which are actually provided to the spouse, family, servants, dependents, or guests of the employee. So if your employer is also taking care of anything that is related to you, maybe your wife or your husband, your family member, it is expected that it is from your salary you will take care of your wife. For example, a man, is your salary that you use to take care of your wife. Now your employer is the one taking care of your wife, for example. So the tax authority sees that as another income that should be taxed. Taxable and tax-exempt income. Taxable and tax-exempt income. The use of assets. So we'll quickly look at the things that can be taxed in this benefit in kind. We have mentioned there before. So owned or acquired asset by the employer. I have to be fast. Where assets, such as motor vehicle, furnished apartments, are acquired or owned by an employer, they are provided for the exclusive use of the employee. The employee is deemed to have derived an income equal to 5% of this asset cost, if known, or 5% of the market value at the date of acquisition, where cost is not known. And this market value will be determined by the tax authority. So that house that you are living in, that your company is paying for, or that the company owns, 5% of it is going to be access to tax on you. So you are going to pay tax of 5 on the 5% of that asset, of the amount of that asset. Then when it is a rented apartment, if an employee is provided with an asset which the employer pay or hire, when the employer hires the house for you or rented the house for you, the employee is deemed to have derived an income equal to the annual amount of rent or hire expended by the employee. So if your employer is paying rent for you for 500,000, it is assumed that you are paying rent. You are using your income. You are using from your income to pay that rent of 500,000. So even though you are not the one that paid the rent, you have to pay tax on that 500,000. Provision of residential accommodation. If an employer provides residential accommodation for the benefit of an employee, where anywhere in Nigeria, and the employee pays no rent for the premises, or pays a rent which is less than the annual value of the premises, the employee is deemed to have derived income each year equal to the annual rentable value of the premises. The annual rentable value of any premises is the value as determined by the relevant tax authority for the purpose of local rates. So if there's a residential accommodation for an employee, and it's the employer that provides that, the employee is expected to, or is assumed to have gotten the annual value, or is expected to pay tax on the annual value of that residential premises. And how do we derive the annual value? It is up to the tax authority to derive the annual value. Because if they leave it to you to derive, you can say it is not, it is what it is. You can say something that is smaller than what it actually is. So it is up to the tax authority of that jurisdiction to tell you what the annual value is. Domestic staff paid by an employer. If you have a gardener, or you have a gatesman or a driver, and it's your employer that is paying, where an employer engages the service of a domestic staff, such as driver, steward, washman, housemaid, gardener, for the exclusive benefit of an employee, the cost incurred in form of salary by the employer to the use of the domestic staff by the employee shall be deemed as income in the hands of the employee and taxed accordingly. So if your employer is paying the salary of your cook or your driver, it is expected that is an income to you. It's from your income, or it's your income that you are using to pay. So even if you are not paying, you're not the one paying that salary, you are expected to pay tax on that salary. Because if the employer is not paying in the first, it is from the one that you have, which would have been subject to tax, because before it even gets to your hand, your employer would have deducted your tax from it. It is from that one that you will use to pay your cook. So because it is not coming from you directly, it's coming from your employer, then you have to make payment for that. Then you have to pay for the tax. Note, the income of a domestic staff shall only be deemed as income in the hands of the employee only where the domestic staff is not a permanent employee of the employer. That is a contract staff. So if the employee is not working, let's say he's not a colleague to you, or there are cases where the cook in the office will still be the one to come and cook for the employees at home. So then that person is a staff directly, because that person's salary would have been subjected to tax since it's coming directly from the company or from the employer. It's only on that ground that that income will not be seen as income in the hands of the employer. So when the person is working as is a direct staff of the company, then the salary that the person is paid cannot be recorded in the hands of the employer that he or she is working for, is serving in this case. So it is only when the domestic staff is serving you directly, then the salary of that domestic staff will be seen as an income in the hands of the employee. Benefits to employee exempted from tax. So in all of these we have mentioned the things that you are enjoying in form of benefits in kind, and because you are enjoying them in the form of benefits in kind, they will be seen as income in the hands of the employee and will be subjected to tax accordingly. So there are other things that the employee enjoy that should not be subject to tax. So before we continue with that, I would like to confirm again if we are still together. Let me see your reactions. Okay, thank you. So please, if you have any question, just help me drop them down. Because of time, we cannot be taking question. We will not be taking question along. But when we finish, you can drop your question. So what are those things that the employee can enjoy and will be exempted from tax? The following expense of the employer for the benefit of the employee are not regarded as benefit in kind and are therefore not taxable in the hands of the employee. So it is clear now that benefits in kind are taxable. Anything that is classified under benefit in kind, it's taxable in the hands of the employee. So what are those things that are not taxable in the hands of the employee? One, we have the expense in connection with provision of meal, food, like food you eat, the food that the employee eats in any canteen for all staff, or provision of assignable lunch voucher. So if you are working in a company and you have lunch, during break, the company serves meal. Some even serve breakfast, some serve lunch, breakfast and lunch. Those food will not be subject to tax. Those one will not be subject to that. Or you have a voucher. Some companies will give their staff voucher to go and do shopping in some strategic shops like ShopRite and the rest. Those one will not be subject to tax. Expenses connected with the provision of uniforms, overall, and other protective clothing. Maybe you are working in, let me say, use for example, the oil and gas sector. You know, their PPE is very, very, very important. Sometimes they write there, no PPE, no entry. So you need to be like fully kitted before you can enter, from your foot to your head, your helmet and everything. So if all of those uniforms you have that you need for to carry out your duty, they will not be subject to tax. Then lastly, we have expenses connected with employees' change of residence as a result of change in his employment. Let's say, for example, you are working in Lagos and the company just opened a new branch in Abuja and you have been assigned to manage the branch in Abuja. You have to relocate from Lagos with your family or even just yourself, as the case may be, to Abuja. The company is paying all expense for you to relocate from Lagos to Abuja. That's money. Maybe they pay to you. Some cases they will be the one to rent and you just move in, or they even pay to you and you did your arrangements by yourself. That will not be subject to tax. That will not be subject to tax. Exemption of the minimum wage earners from the payment of personal income tax. So the section 37 of Peter, having been amended by the Finance Act of 2020, employees earning below the national minimum wage or less for any employment are no longer liable to pay tax or monthly payee deduction. So if you are working in an organization and somebody is earning below the minimum wage, which is currently 70,000, that person should not be subject to payee. You should not deduct payee from the person's salary. Please, if you are doing that before, please stop it. The money is not even big. We're not deducting tax. The government have said we should not deduct. So if the person is earning below 70,000, is earning 70,000 and below, we are not expected to remit payee. We only remit on the people that are earning more than that. Condition for taxation of income for employment. Are we still together? All right. Thank you very much. Thank you very much. I can see your reactions. Thank you very much. So let's continue. Condition for taxation of income from employment. Section 10 of the Personal Income Tax Act provides that the gain or profits from an employment shall be deemed to be derived from Nigeria if A, the duty of the employment are wholly or partly performed in Nigeria. So when you say this income is from, we want to tax this income, or this income was derived from Nigeria, how do you know? How do you know that this particular income was derived from Nigeria? Now, the first condition is that the duty of employment is completely carried out or partly carried out or performed in Nigeria, unless there are exemptions. The duty are performed on behalf of an employer who is in a country other than Nigeria, and the remuneration of the employee is not borne by a fixed base of the employer in Nigeria. So what is fixed base now? So what does this even mean? It means that if the work that somebody has done for a particular employer, the employer that they did this work for is not in Nigeria, or the company is not in Nigeria, for example, and the remuneration, the payment is not coming from the let's say the branch that is in Nigeria, then we cannot say this one is not subject to tax. 2, the employee is not in Nigeria for a period. The employee is not in Nigeria for a period or period amounting to an aggregate of 183 days. 183 days is like half of the year, inclusive annual leave or temporary period of absence, or more in any 12 months. In any 12 months period commencing in a calendar year and ending either within the same year or the following year. So if the person did not stay in Nigeria for 183 days, or for a minimum of 183 days, can be more. If the person did not stay in Nigeria for 183 days and more, then excuse me, that income shall not be deemed to be derived from Nigeria. The third condition is that the remuneration of the employee is liable to tax in that other country under the provision of the avoidance of double taxation treaty with other country. Now, if the tax has been the remuneration has been subjected to tax in another country, maybe that's where the person did the job and they've paid the person from there and they've already taxed that money there. So that money now is not deemed to be derived from Nigeria. Another way we can pick remuneration that are derived from Nigeria is that the employer is in Nigeria or has a fixed base in Nigeria. The employer is in Nigeria or has a fixed base in Nigeria. So another condition is that the gain or profit from any employment exercised in Nigeria shall be deemed to be derived from Nigeria, whether the gain or profit from the employment are received in Nigeria or not. The gain or profit from any employment exercised in Nigeria shall be deemed to be derived from Nigeria, whether the gain or profit from the employment are received in Nigeria or not. So because the exercise was carried out in Nigeria, it is assumed, the tax authorities say it is a Nigeria money. Whether you are paying it from Nigeria or not, it is a Nigerian money because the exercise was carried out in Nigeria. Then lastly, the gain or profit from any employment, the gains or profit from any employment, the duties of which are only or mainly performed in Nigeria, shall be deemed to be derived from Nigeria during any period of leave of the employee from the employment and any period of his temporary absence on duty from Nigeria. So the gain and profit from any employment, the duties of which were wholly or mainly performed in Nigeria shall be deemed to be derived in Nigeria during any period of leave. The employee from the employment or any period of his temporary absence. So if you are on leave, you are working in Nigeria and you are on leave, they pay you for leave, or you made gain or you made profit for that period, it is still Nigeria profit. That's what the D part of it is trying to explain to us. Determination and importance of residence. So this is very, very, very important. Knowing where you are supposed to remit your employee tax to. A lot of people used to fall victim of this, and to an extent, companies that have maybe branches or have workers outside Lagos, for example, a lot of people used to make mistake by remitting the taxes of those staff that are outside Lagos to LIRS. So then it is important. That is why it is important to know to determine the place of residence and to know the importance of residence. So if you know the importance of residence, then you should know that an employee of your company that is living in Ibadan, you are not supposed to remit the tax of that person to Lagos State Internal Revenue. You are supposed to remit it to Oyo State Internal Revenue. If the person is living in Abuja, you're supposed to remit it to FCT Internal Revenue, not remitting everything to Lagos. So you're supposed to register your company with that state internal revenue and you remit the tax to that state internal revenue. In personal taxation, determination of residence is vital for the purpose of identifying the relevant tax authority of the taxpayer. Resident individual. Who is a resident individual? An individual is regarded as a resident in Nigeria in an assessment year if one is domiciled in Nigeria, if the person lives in Nigeria. Two, the person sojourns in Nigeria for a period or periods in all amounting to 183 days or more in a 12-month period. The person is in Nigeria for a period of 183 days, then the person is a resident of that place. Three, the person serves as a diplomat or a diplomatic agent of Nigeria in a country other than Nigeria. Then the person's residence. So you know the diplomats, they send them, people they send out maybe to represent the country. So if they are outside, they are still assumed to be residents of Nigeria in the year of assessment. So these are the three conditions that we use to determine a resident individual. Then how do we know non-resident individual? Excuse me. So for a non-resident individual is a person who is not domiciled in Nigeria or who stays in Nigeria for less than 183 days in a 12-month period, but derives income or profit from Nigeria. A non-resident individual becomes liable to tax from the day he commences to carry on trade, business, vocation, or profession in Nigeria. In the case of employment income, he is liable to tax in Nigeria when he becomes a resident. So for the excuse me, for the period that he is not a resident, we cannot tax him in Nigeria. So we can only tax him when he becomes a resident in Nigeria. So there's another complication between residence and nationality. So let's quickly look at the difference. Residence should not be confused with nationality. The Nigeria tax law attaches importance to residence and not nationality. Therefore, whether you are a citizen of Nigeria or a citizen of another country, the same standard applies to you as far as you are resident in Nigeria. The same condition will also apply to an individual who is not a resident in Nigeria, whether he or she is Nigerian or a foreign national. So in the issue of tax, when determining the residents and non-residents, it's not by citizenship that you are in Nigeria or not. Expatriates that are working in Nigeria, they are expected to remit their tax. They're expected to remit their tax to Nigeria or remit their tax to the states where they are working. So because they are not Nigeria does not mean they will not remit tax. What we are looking at, what the tax law is looking at is your resident, the number of days or the condition that determine whether you are a resident or not. Place of residence. So before we continue with place of residence, let me confirm again if we are still together. The hands are reducing. No? These are some of us are already sleeping or we are tired. Okay, thank you. So let's continue. So for place of residence, in relation to an individual, place of residence means a place available for his domestic use in Nigeria on a relevant day and does not include any hotel, rest house, or other place at which he is temporary lodging, unless no more permanent place is available for his use on that day. So for us to determine a place of residence for an individual, it's a place that is available for his domestic use in Nigeria, where you stay or where you live. That is your residence place. So where you spend the 183 days in the tax year within the 12 months, that is their residence place, not hotel, not rest house. Except we can't determine your house. There is no available place to call your house or your place. Then you cannot consider the hotels and the other places. Principal place of residence. That's for place of residence. Then there is a principal place of residence. Principal place of residence in relation to an individual with 2 or more places of residence on relevant day. So for people that have more than 1 places, there are some people that are polygamy, some men that have more than 1 wife. 1 wife is in Lagos, another wife is in Oyo, for example. So they tend to maybe shuffle. On weekend, they will travel home, or maybe weekday, they travel home. So how do we know their place of residence that we want to tax them now? So let's look at the various conditions that can help us determine the principal place of residence. In the case of an individual who has no source of income other than a pension in Nigeria, the place or those places in which he usually resides. So for somebody that is a pensioner, the person's place of residence is the place that the person resides. That's the place of residence. Then in case of an individual who has a source of income other than pension in Nigeria, that place or places or those places which on a relevant day is nearest to his usual place of work. In case of an individual who has a source of earned income other than a pension in Nigeria, the place or places of those places which on a relevant day is nearest to his usual place of work, then that is the principal place of residence. In the case of an individual who has a source or sources of unearned income in Nigeria, that place or those places he usually resides, where he stays, will be his principal place of residence. Then in the case of an individual who works in an office or operational site of a company or other body corporate, that place of which the branch office or operational site is situate, provided the operational site shall include oil terminals, oil platform, flow station, factories, quarries, construction sites with a minimum of 50 workers. So this one is talking about those people that maybe they'll go to a site and maybe they're working there, they spend some days there to carry out those operational work. So their place of residence now is that place that they are working, where the site where they are working, where the site is situated, that will be their principal place of residence. Residents of different category of individuals. So we have different category of individuals, and we want to look at what their residence is. Liability to income tax is often determined according to whether a person receiving income is resident in a state for a particular year of assessment. There are different individuals, different categories of individual as follows. An individual, whether in employment or whose only source of income are unearned income, is deemed to be resident for a year of assessment in the territory in which he has a place available for his domestic use in Nigeria on the first day of January of the year of assessment, and does not include any hotel, rest house, other places at which he is temporarily lodging. So that place, that your domestic place, that place you call your house, as at the first day of January, that place will be your residence. That will be deemed your residence. For somebody that is having a that is receiving an unearned income, not like earned income, unearned income like dividends, rent, and the rest. Those are types of unearned income. Then for an executor is deemed to be resident in the territory in which the deceased individual was last deemed to be resident, or would have been deemed to be resident if the law had been in force prior to the date of his death. So an executor is somebody that let's say a deceased person, somebody that died, and the person that will stand to say, okay, this is what it is, to establish or execute the will of the person that will say, okay, this is what it is, this is what it is. So that person is deemed to be resident in. If you want to subject whatever the executor is receiving to tax, and you want to determine the place of residence of that executor, the place of residence will be determined in the territory in which the deceased individual was last deemed to be resident. So this particular person, you are tracing his task to the role that he is carrying out. So you are tracing that task, the tax remittance, or you want to know the tax authority you want to remit that task to it's been determined, or it's been defined by the role that the person is actually carrying out, or would have been deemed to be resident if the law had been in force prior to the date of his death, which is the death of the deceased person. Then a trustee of any trust or settlement is deemed to be resident where all income arise in more than one territory. I take that again. A trustee of any trust or settlement is deemed to be resident where all the income of the settlement or trust for a year of assessment arises, whether the income arises in more than one territory or where the tax authority cannot be determined. The Federal Inland Revenue Service is the tax authority. Therefore, partners in partnership, how do we determine their place of residence? For partners in partnership are determined to be resident where the principal office or the place of the partnership is situated on the first day of that year, or it's first established during the year. So when they first establish the partnership business, that place will be the place of residence for those partners, or the first place that the partnership is situated on the first day of the year, that place will be deemed the place of residence for the partners. Then a village or an indigenous community is deemed to be resident in the territory in which the community is found. So if your village is in Ogun State, for example, whatever that maybe a community has something that is subject to tax, their place of residence will be deemed to be the territory in which the community is found. Definitely is going to be Ogun State's internal revenue. That's where the taxes will be remitted to. So we'll move on to the different types of the meaning of income and the different types of income. Then again, before we continue, let me see your hand, let me see your reactions if we are still together. I know most of us don't like theory, but the theory is still needed. This is tax and we are dealing with laws. You need to understand the laws before you can even jump into the calculations. So meaning of income. Income chargeable to tax is the aggregate amount, each of which is in the income of every taxable person for the year from a source inside and outside Nigeria, including gain from any trade, business, profession, or vocation for whatever period of time such trade, business, profession, or vocation may have been carried out on or exercised, and any salary, wages, fee, allowance, or gain from employment during, including compensation, bonus, premium, benefit, or other prerequisite allowed, given or granted by any entity to the employee, other than those specifically stated as non-taxable. So we are looking at meaning of income now generally, whether you are into employment or whether you are into vocation or whether you are a professional. We're looking at income. You know, some people can some persons can do the three at once at a goal. They are rendering tax services. Some of them are fashion designers. Some of them, they still go to work. I know somebody that works 9 to 5 and makes clothes very well. So we are not looking by the meaning of income, we're looking at the totality of everything that you earn from all the activities that you do within a particular period of time. So if you want to if you want to be subjected to tax, your income now cuts across every source of income from a taxable person, whether it's within Nigeria, the money is in Nigeria, or it is outside Nigeria. Everything put together makes up your income. Then we have types of income. We have the earned income and the unearned income. So for the earned income, in relation to an individual, it means income derived by him from a trade, business, profession, vocation, or employment carried on or exercised by him, and a pension derived by him in respect of a previous employment. It includes profits, salaries, wages, commission, bonus. So for an individual, earned income are those income that you derive from an activity, which could be a trade, it could be your business, it could be a profession, it could be that you are working and at the end of the month, the company you're working with is paying you. That is earned income. And even your pension, for those people that are not pensioners, what they receive every month from the money that they have contributed before and is not coming in, that is an earned income. So earned income also encompasses all of them. It can be from profession, it can be from vocation, it can be from employment, it can be from trade, and all of them. That's for earned income. So we have the place of residence in relation to earned income. So if you want to tax this earned income, how do we determine the tax authority that it should be taxed to, or that it should be remitted to, or which tax authority it's liable, is in the best position to receive our earned income? So it is when dealing with personal income tax, place of residence is very, very important. It is it's key that you must consider when you are dealing with personal income tax, unlike the CIT that is FIRS. So regardless of where you are, anywhere you are in the country, you remit your tax to FIRS. But for place of residence, you have to be very careful so that you don't cause trouble between two tax authorities, especially when you are paying big tax. So you have to be careful. So for place of residence in relation to earned income, an individual who has a source of earned income in Nigeria for a year of assessment other than from employment or a pension shall be deemed to be resident for that year in the territory in which he had a place or principal place of residence on the first day of January in that year. So if you are earning, if you have an earned income, if you have a source of earned income in Nigeria that is not employment, take note of the exemption. So it is not employment income and it is not pension, but is another type of earned income. Then the tax or your place, your residence will be that place or your principal place of residence on the first day of January in that year. 2, if the source of income in the is first acquired by the individual during the year of assessment and had no place of residence on the first day of that year, he shall be deemed to be resident of that year in the territory where he first established a place of residence during the year. If the source of the income is first acquired by the person during the year, like if it's the first time you're acquiring that income, maybe that's the first year you did that business and you got something from it, and you had no place of residence on that first day of that year, he shall be deemed to be resident for that year in the territory where he first established a place of residence during that year. So when you first establish a place of residence that year, the territory where you first established that, okay, this is where I am this year, this is my place of residence. That's the place that first acquired earned income will be liable or subjected to tax. In another case, the individual shall be deemed to be resident for that year in any territory for which any part or whole of his income arising in Nigeria is derived. If the income is derived from more than one territory in the federal capital territory. So if you are getting the income from different places now, what you should do, the individual shall be deemed to be resident in that year in any territory from which any part or the whole of his income is derived from. So if you are deriving it from different territories, so you can just choose one of the territory, and that's where you will remit your tax to. Then let's look at unearned income. Our time is far gone. So for unearned income, what are unearned income? These are income derived from sources other than employment, business, or reward for services rendered. They include investment income such as rent, dividend, royalty, earnings from trademark, patents, and others. Others are gifts, inheritance. So if you are not deriving, if the income is not coming from your employment, direct employment, it's not from business, if it's not from profession or vocation like we have mentioned before, then it is an unearned income. Maybe from an investment you've carried out, you did an investment some time ago and you started receiving interest from it, or maybe it's you're into real estate, you have buildings, you have house, and you're receiving a rental income from it. It could even be other equipment. It's only houses that people rent. Could be dividend, could be royalty, could be patent, and the others. So that these are classified as unearned income. They are not directly, it's not something that you engage on directly or what you are doing directly, not the income you are getting from the things that you do directly. So they are tend to be unearned income. So how do we determine the place of residence in relation to this unearned income? An individual who has no source of income, an individual who has no source of earned income in Nigeria for a year of assessment, but has one or more sources of unearned income in Nigeria for that year, shall be deemed to be resident for that year in the territory in which he has a place or principal place of residence. So where you have determined to be your place or your principal place of residence will be where that's your unearned income would be subject or be liable to tax on the first day of January of that year. So that place that you have determined that that's your place of residence or your principal place of residence will be where that's your unearned income will be subject to tax. If all the unearned income of the individual for that year arise in one territory and he has no place of residence on that day, he shall be deemed to be resident for that year in that where the income arise, in that place where the income arise. So if you don't have a place of residence and you had an unearned income in one territory, then your place of residence will be that place where where you receive that your unearned income. Maybe where the place where the house is, where you got that house, the rental income from. That's where you will pay your tax. Then if the unearned income of the individual arise from that year, is more than one territory and has no place of residence on that day, he shall be deemed to be resident of that year in the territory from which any part of the unearned income arise, just like individual, just like the way we explained for earned income. You have earned income, unearned income from different places, and you don't have a place of residence. So the territory in which one of any part of the unearned income arise, you just choose one territory and you remit your tax to that territory. So resolving disputes over residence rules application, because a lot of time there tend to be issues here and there for place of residence, and most time you see this tax authority chasing this. They chase company most times, and they will not chase tax or another tax authority. If you do and you remit the taxes of your employee to the wrong authority, the right one that you're supposed to remit to will assume that you have not remit, so they'll start chasing you. So that's why we accountants or tax people, we have to be very careful when we are remitting taxes of our of the company's employee, so that we don't have to remit it twice. And you know, when you make mistake, you make the mistake as an accountant and the liability is coming, some company don't even mind to tell you to pay, to be the one to bear the burden. So you just have to be very, very careful when you are remitting. You have to be sure. That's why you have to understand the tax law. What does the tax law says about this? You have to understand it very well, and you work according to what the tax authority has advised or they have given to us. So before we continue with the resolving, let me see if we are still following, if we are still here. I want to see your reactions. All right, thank you. Thank you for staying to this time. Okay, let's continue. Resolving disputes over residence rule application. So how do we resolve all of these disputes? Because they will always come, or they come. Where the authority of residence of an individual for a year of assessment may be determined under more than one of the preceding circumstances, it shall be determined by the first determined circumstance applicable. So what are the circumstances? One, by reason of A above, a determination of residence of an individual for a year of assessment fails to be revised by a tax authority other than that of the territory in which the individual is finally determined to be resident for that year, it shall discharge any assessment made by it on the income and the individual for that year. I will take that again. Where the tax territory of residence of an individual for a year of assessment may be determined under more than one preceding circumstances. It shall be first determined circumstances applicable. It shall be the first determined circumstances applicable. So what is the first one now? Looking at what we have, what A has stated, a determination of residence of an individual by a year of assessment fails to be revised by a tax authority other than that of the territory in which the individual is finally determined to be resident for that year, it shall be discharged. It shall discharge any assessment made to it on the income and the individual for that year. So where a dispute arises between two or more tax authority or between a tax authority and an individual with respect to residence of an individual for a year of assessment, the aggrieved party shall do the following. So this is where maybe the tax authority is not charging the company to say you are supposed to remit tax to the tax of your staff to us and you did not remit it. Or maybe one tax authority is accusing the other one to say, yes, our taxes have been remitted to you. Then what shall happen? What will happen? They will set out all the ground on which he relies to refute the determination. So they have to like explain. If you are coming to accuse somebody, you are coming to say somebody did something to you, you have to have your facts right. You have to know, okay, this is what it's supposed to be, and this is what has been done. For that reason, I am bringing up this. So you have to get your facts right and say this is what it is. You will not just come and be arguing from a blind perspective. You argue from an informed perspective, so you get your facts right. Another way is to refer those grants together with the observation thereon by the tax authority to the joint tax board. So there is a joint tax board, I think in chapter 2 or chapter 3. Mr. Michael had explained the various tax authority, the Federal Inland Revenue, State Inland Revenue, the Joint Tax Board, and even the local government revenue service collectors, and their different authorities, what their different powers and their functions. So when there is a dispute between two tax authority, it is the duty of the Joint Tax Board to resolve all of this, to resolve it among them. So if you are coming to say you are coming to lay a dispute for a particular tax issue, by the time you have your facts right, you have to present them, refer them to the Joint Tax Authority, because they have the power to resolve issues among two or more tax authority. The secretary to the Joint Tax Board, which is JTB, shall give notice of any grant, observation of fact referred to by relevant tax authority to those parties, including the individuals who are affected or likely to be affected by a determination of residence by the relevant tax authority, and shall afford the parties a period which is not less than 40 days from the issue of the notice in which to reply to it. So by the time this issue is related or it is reported to the tax authority, the secretary of the is reported to the Joint Tax Board. The secretary of the Joint Tax Board will give a notice of any grant, observation, or of fact as referred to the relevant tax authority or the individuals that are affected, to determine the residence of the relevant tax authority, and shall afford a party a period, give them period that is not less than 40 days for the issue from the date of issue. So you should give them a notice, and it will give them a notice of not less than 40 days from that issue date. The secretary to the Joint Tax Board may call for further information to be given by any party, including an individual to an objection or dispute within such time as may appear to him to be reasonable. So it is the duty of the joint task board to carry out their investigation, to look at the issue thoroughly, and if they need further information that will help them resolve the issue that is at hand, they will call for it whenever they wish or whenever they need it. At the expiration of the period mentioned in 3 above, that's at the expiration of the 40 days, whichever, or by the time they get their facts right, whichever is earlier, the joint task board shall proceed to determine the territory of residence of the individual for the relevant year of assessment. So by the time they finish their investigation, if it is that they finished it before that 40 days, or by the time it is 40 days, which is the notice period that they have given, they will be the one to decide the territory of they'll be the one to decide the territory of residence of the individual for the relevant tax years. So they would have gotten their facts right, and they will, based on the facts they have, based on the information they've gotten, they will be able to decide where exactly the residence of the individual is for that relevant year. So they'll be the one to settle that. Also, the written of notice of a determination by the board shall be given by its secretary to the individual and to each tax authority affected. And any assessment which has been made on that individual but not in accordance with the determination of the joint tax board shall be discharged. So if you already made a payment, maybe you already paid to the wrong tax authority before the issue came up, and after settlement it was discovered that you're not supposed to make payment to that tax authority, then the payment shall be discharged. The tax authority which has referred an objection to the joint tax board shall not determine the objection unless the objection is written by him. Unless the objection is withdrawn by him in writing. So when the tax authority has referred to an objection to joint tax board, it shall not determine the objection unless the objection is withdrawn in writing by him. The determination of the joint tax board shall be binding on all tax authority and on an appeal tribunal, but may not be questioned by the individual in the High Court of the territory. May not be questioned by the individual in the High Court of the territory. The tax authority shall make the tax authority which has made the relevant assessment. Also, an appeal from a decision of the High Court in respect of the territory of residence of an individual shall lie with the courts of appeal and the Supreme Court. So if, for example, what the joint tax board has decided did not go well with the tax authority may want to go to want to question the individual or question the other tax authority at the High Court of the territory. So let's say, for example, Lagos State, for example, after joint tax board have done their own and you say you are still not satisfied, you want to take up the issue to the High Court. And if the High Court gives their judgment and you are still not okay, you can still take it up to the Court of Appeal and even the Supreme Court, as the case may be. But firstly, it is first handled by the joint tax board, especially when it is affecting one or more tax authority, one or more state internal revenue services. when it's affecting one or more state internal revenue services, it is first handled by the joint tax authority. It's on the occasion where the joint tax authority cannot handle it, or they've even handled it and they decided, but a party to it is still not satisfied, then that party can take it up to the High Court of the territory. Then if the High Court give their judgment and one of the parties is still not okay, then you can take it up to the appeal court as well as the Supreme Court, depending on what the case is. Where a tax authority discovered that an individual who has been assessed by it to tax for a year of assessment is deemed to be resident for that year in the territory of some other tax authority, the assessment shall be discharged, and any tax already paid by the individual in respect of the assessment shall be set off. So, for example, after I have paid my tax to Lagos State and I discover, or it was discovered that I'm not supposed to pay to Lagos State, I was supposed to pay to Ogun State, for example, that payment shall be discharged, and any tax that I've already paid can be treated in the following ways. One, shall be set off against tax owing to any other year by that individual to the first mentioned authority. So if you are owing them before, they will take it. How will you even be owing them in the first place? Two, it can be paid to the government of the other authorities. Three, it can be repaid to the individual in such proportion as the first mentioned authority may decide. So if you mistakenly pay your company's tax, your employee tax to a wrong tax authority, these are the possible ways that you can get your money back home.
Okay, I found this on the web for tell me.
So these are the possible way that you can get your money back. One, they will set it off. Be sure that your company is not even owing them in the first place, because that's when they'll start bringing record. And you discover that the money you even paid is not up to what you're owing. So be sure that your company is not owing them. So if you are owing them, they will just collect it for whatever you are owing them. In another instance, what they can do is to make the payment to the other tax authority. So if you have remitted your state tax to a Lagos State, for example, so they cannot pay it to Oyo State on your behalf since it has been resolved, or they will pay it to you. But if they will return it to the company, for example, they are the one to determine what they will pay, at what proportion. They are not going to pay it to you at once. They'll be the one to mention what proportion they can make payments of per time, pending when the payment is fully made. I hope we get it. When government owe you and government is going to pay you back, you know what it is. That's what it is here. So let me confirm again if we are still following. Yeah, thank you very much. Thank you very much. We are almost at the end of the class. This is this chapter 12 in our ICAM pack is under the employment tax. We have different under the personal income tax, we have different types of taxes that are there. So in our next class, we'll continue with it. We are not going to do any calculation on this topic. We are going to do the calculation together where we are treating our personal income tax. But I have an illustration I'm going to show to us to see how employment tax can be calculated. This is like the template of how to compute your employment tax, a format. So looking at the format here, we have the total income that an employee is earning. So this will now comprise of the amount in form of benefits in kind, in the one that is coming in cash. Remember, we talked about cash, emoluments, and benefits in kind. So you can either get it in cash or you get it in kind, as most people usually refers to it. You get, when you want to say, you want to pay me, should I pay you in cash or I pay you in kind? So those house accommodation, free this, free that, free car that you are using, they are in kind, they're actually in kind. Then cash are those ones that will come to your bank account, will land in your bank account. Bam, bam, this is the time. Some people have already started collecting, and some people have even collected and finished it. So that is it actually. So when you accumulate all of this together, it will give you your total income. Then you will not deduct those things that are not taxable income. So you see that amongst all of them, there are some things that are not taxable. Remember, we mentioned canteen, we mentioned uniform, for example, that if the company buys you uniform, PPE, and the rest, you are not expected to pay tax for them. Those are non-taxable. So those non-taxable will be deducted. Then you now get to your taxable income. So income on which no further tax is payable. That's after you have deducted your you've deducted your non-taxable from your income now, then you get that one. Then you less those tax exempt items. So when we are treating a personal income tax in details, we'll see most of those tax exempt items, like your pension contribution, your NHF, your NHIS, NSITF, life assurance premium, your gratuity, depending on the company or depending on what it is. Now, some companies don't do all of this. Some companies just do few things, while some they do all of them. So it depends on what is happening in that place. So you deduct all of this, but you should know what are tax exempt. The list of things that are exempted, like expenses that are exempted from tax. So you deduct all of them and you get to your gross income. It is the gross income, which is also called the taxable income, that you will not subject to tax. Mind you, this so when you've gotten your gross income, you bring in your consolidated relief allowance and you apply it 200%, 200,000 or 1% of your gross income, whichever that is higher, plus 20% of your gross income. Then you will not get your chargeable income. This has now been changed, but we are still using it for now. The new one will commence in January 2026. So by January now, this one will no longer work again. But for now, this is what we are still using to calculate our taxes at the personal income tax level. So by the time you get your gross income, then you will now bring in your tax table according to your personal income tax act, the tax what it is, the percentage that each of your income is subject to. So depending on the total amount of income that you have, that will determine the amount that you pay in tax. And in Nigeria, we are doing progressive tax. So the more you earn, the more you pay, because as it is going up, you see that the percentage is increasing. The first 300,000 is 7%. The next 300,000 is 11%. The next 500,000 is 15%. The next 500,000 is 19%. Next 1.6 million is 21%, and the balance, if you have done 1.6 million at 21%, you still have a balance. Then the balance will be subjected to 24%. Any amount that is remaining at that point to be subjected to 24%. Then you get your tax payable. Then there is a deduction of withholding tax. Withholding tax is an advance payment. So for those people that, for example, are into profession, we define vocation, profession, and income, employment income. So for those people that are into profession, they might, while they were being paid, some of their payment would have been subjected to the withholding tax, so they can claim those withholding tax. They will use it to reduce their tax liability. So that withholding tax is an advance payment of tax. The government will tell the company to collect this tax on their behalf and remit it to them. So it's a way of collecting the tax from you in advance. The tax you're supposed to pay at the end of the year, they're already collecting it small from you. So at the end of the year, when you've computed your tax and you know what your tax is, everything that has been deducted from you you accumulate it and you less it in the form of withholding tax, claimable, you claim it, then the final tax will now be what will be your tax liability at the end of the day. So this will bring us to the end of the class today. Our next class will be next week by God's grace. So at this junction, if you have any question, I would like you to raise up your hands. We'll answer the ones that we can answer here. If we cannot answer all of them here, we can bring them up to the WhatsApp group.
Wow. Mrs. Favor, thank you so much for the wonderful class. And I'm
Thank
sure
you, sir.
everyone really enjoyed the class. And before we start taking questions, so let me just tell some of us that we are still online that we have decided to share the topics into two. She should be taking some part. Then we'll continue with tomorrow. We have our task classes, 7 p.m. Fridays and Saturdays. So she will be taking some part of the course topics, subjects. Then myself, I'll be taking some part of the subject so that we can finish early. Then everybody can have a good time to start preparing themselves. So everybody, let's show love to Favor ACA for this
Thank
wonderful
you,
class.
Favor. Thank you very much,
Yeah.
Favor.
So it's time to take a
Welcome.
question. You can start taking your questions now. Thank you.
Thank you,
I
sir.
want to thank you very much, Favor, for the nice class. Can I ask a question, please?
Yes, please go ahead.
Okay, for the itinerant workers, right? You mentioned that the only where we will charge them to tax will be the place they stayed for up to 20 days for the past 3 months. Now, I want to ask, when computing their tax liability, the one we are to tax, is it their yearly tax liability? I want to take, for example, now, let's say I'm an army or a soldier, and I worked in Anambra for 3 months, and from what you explained, I'm to pay Anambra my payee. Then for another 3 months, I'm in Lagos. For another 3 months, I'm in Yenugua. Now, in the annual tax competition, how will I share the tax? How will I share it? I don't know if you understand.
Yeah, I understand you. So
Thank you very
first
much.
of all, for the itinerant workers, the armies and the armed forces, they are exempted. They are not part of it. You know, those people, their taxes are remitted directly to federal inland revenue. We don't remit any of their tax to any state internal revenue, because those people, by the nature of their job, they are not in one place. So it will even be very difficult to determine which state internal revenue you want to remit their tax to. And I believe that's the reason the tax authority just channeled their taxes to Federal Inland Revenue Service, FIRS. Then for the itinerant worker, like I explained, if you are computing their annual tax and you've determined the place they stayed for a minimum of 20 days in the period of 3 months, that is where you will remit the tax to. So you are computing for a year, you are computing their tax for a year. So you determine what their tax is, then that is where you will remit it to. The place they stayed for a minimum of 20 days. It could be more than 20 days actually. But for within if you are able to hold 20 days in a 3 months of their stay, because we are saying that they don't stay in one place. So you are able to hold 20 days within a 3 months that they have spent in a particular place. So that place you hold that 20 days is where you will remit their tax to for that year of assessment. I don't know if that answers your question.
Yes, thank you very much. I hope you drop the notes for us in the group chat, right?
Yes, I will.
Thank you very much.
Okay.
So
Is
I
it
think
Rebecca
have,
that?
Rebecca.
Yeah, Rebecca.
You have Rebecca. Rebecca should ask her question next.
Good evening, Madam Favor. You actually done a great work, and thanks to the organizer of this program. I have a clarity, and I'm sure that with this, if we put into practice, it might come out well. My question now is, when you talked about payment of tax, and which has to do with the rent, when the employer pay the rent of the employee. Now, you made mention of the rent, which tax will be taxed on. If, for instance, if I stay in Enugu and I work in Abia State, will the government remit my tax to the Enugu? That's number one. Number two, you said something about task that has to do with an employee where he or she has to pay tax on. Now, when it comes to the civil servant or public servant, and I know as that is among the tasks. And two, prorating the tax. Sometimes you don't get to see how much is removed as the total, how they come about the total of your tax. All what you see is that the social thing is your total of your taxes. So they do not allow to see the prorating angle. So how do we resolve that in an organization? One is a rent, someone living in Enugu and he works in Abia, and two, organization not clearing people's tasks in sectionalizing it, like hazard allowance, welfare allowance, all that. How do we resolve
All
that,
right,
please?
thank you very much. I get your question, but for the sake of clarity, I will just repeat it to reconfirm if I got it clearly. So first of all, your first question is on a place of residence. Somebody lives in Enugu and works in Anambra.
Yes.
Where will the person's tax be remitted to?
When it comes to rent. Yes, sir.
When it comes to what?
Rent.
When it comes to rent, okay.
Yeah.
Then the second one is the getting clarity on the deductions or the allowances that make up your taxes, right?
Yes.
Okay. So I believe we have various principles of taxation, or they call them canon of tax, and there is one that is called principle of clarity, that as a taxpayer you can seek clarity to know what your tax is. I really don't know how it works in the public sectors, like the government sectors. I have not worked there before, but I believe in the private sector, when you are seeking for employment and your employment letter is given to you, maybe they give you the employment letter in gross, for example, like gross salary with deductions. You can ask question and say, with this, how much is my net salary? And even if they have told you that your net salary is this, you can still go ahead and ask and say, what and what have you deducted to get to this next salary? So everything is just in seeking clarity. You ask and it should be given unto you. I don't believe if you ask anybody that I want this breakdown, there's something they call, there's a pay slip also in the government sector. So I believe that pay slip should have your breakdown of everything that everything that has been calculated before they go to the amount that is given to you. And I remember in the days of school, some of my days in the bursary department, I used to see most of those staff ask for their pay slip. They come to the bursary department and ask for their pay slip. So if you are in those kind of environment, you can ask for it. They give it to you. You look at it. Even if you don't understand, you can call somebody to help you look at it. Then you have a detailed knowledge of what is being deducted from your salary. I don't know if that answers that question.
That's clear. Then the second one, the rent part.
Second one, on the place of residence. If you are working in Anambra and you live in Enugu, your tax is expected to be remitted to your place of residence where you live.
Okay, I'm clear there. Thank you.
Thank you.
Oriade next, and I think that will be the last question because we need to shut down by 9 p.m.
Okay, sir.
Hello, madam. Good evening, madam.
Good evening, sir.
Yeah, please, my question goes, when we were talking about employment, you said we have a verbal, we have a visual and implied. Could you please explain what implied employment means? Then the second question, where you are explaining condition for taxation of income for employment, there is a particular word there that said born by a fixed base something. Could you please explain that one too?
Okay.
Thank you.
Thank you, Oriade, for your question. So let me on the fixed base. So a fixed base of an employer is the permanent establishment or the location of the company. So there are some businesses that have location in a different country, for example, or different states. So, but where you have the permanent, like the permanent office, some people used to call it head office, or where the registered office, that is what is referred to as a fixed base. Then for implied means like when you, like a context, somebody gives a context about something, not really direct. The person give a context or a circumstance about something. That is what is meant by implied. It is not written, no. It is not verbal, like the verbal thing. Maybe like a comparison. That's what an implied action is. I don't know if that answered your question. Oriade, are we good?
Yes, I've signified with emoji. So I'm
Okay,
good.
okay.
Thank you.
All right. Thank you very much for your time. Like Mr. Mike had earlier said, we'll be shutting down so that the 9 p.m. class can go on. So if you have any other question, you can drop it on the WhatsApp group. So I will just answer from there. Thank you very much for your time, and thank you for having me.
Thank you, Auntie Favor. Thank you so much. Thank you so much. So, guys, thank you for being online. And also, thank you for showing love to Madam Favor. She's really wonderful and she really delivered the topic very, very well. So, by God's grace, we'll continue our class tomorrow, 7 p.m. So, I'm sure you guys will be happy that we are sharing the courses into two so that we can cover as fast as we can. And you guys will have a lot of good time to be able to practice and do a lot of things. So I'm going to open the group, and please just ask your questions. Don't come and ask, please, I need link to join any group. Don't come and ask in that group, please. Don't come and ask in that group. And also, Madam Favor, they're asking, will you drop the lecture notes?
Yes, I will.
Okay. So she's going to drop the lecture notes. So thank you guys for joining. So we are shutting down right now so that the other class can continue. See you guys tomorrow. Bye-bye.